Greetings, members one and all of the Salivation Nation. This factor should be considered before buying silver. Let's explore. Do we really need another reason or factor to buy silver? If I was to instruct you to write a list of the reasons to buy silver and the factors that weigh your decision, more than likely you could come up with a fairly exhaustive list that would overlap with many other members of the community here. And that is something that we should take into account. The fundamentals of silver are what drives us to buy this metal because we understand it as a wealth preservation tool. We also know that it is money that has been hibernating as such for quite some time, at least since the 60s. But we also see silver as that hedge against economic instability and also as an industrial metal and as a commodity. And that leads us to this factor that we're talking about based off of an article here that we have from Seeking Alpha. It talks about that silver, well, it is a metal that we understand, a precious metal that is hot. Sometimes it's not. We know it's volatile. And the timing of your buys can be crucial for sure. And so this factor will help you to make a decision on when to buy it based off of the business cycle. And this is something to take into account with silver, to view it through the lens as it is a commodity, because we know that well over 50 to 55% of the metals, the metal that is mined, is utilized as a commodity. So this article talks about it as this commodity and how these business cycles with some charts and graphs that show us the movement of silver and how you can really, in a sense, time your buys or use this as a factor to help make that decision on when to buy at certain times. It's hot, and some traders and commentators do not know how to describe its recent price sharp appreciation. We see that recent history can be helpful. The above chart here that we're looking at shows silver peaked in 2011, like gold and copper, when the economy started to slow down. It kept declining until during 2012 to 2016, where it did see a little bit of a jump there, even as the economy showed visible improvements during those years. It traded in a range from 2016 to 2020. It has more than doubled since then as the economy began to grow at a faster pace. This above chart here shows the graph of silver prices divided by gold prices. Silver has been weaker than gold from 2011 to 2020, as shown by the steady decline of the ratio during that period. We've also seen the ratio actually widen. I think that's what they meant there. Since March 2020, it has displayed considerable outperformance compared to gold. And we can see here in the chart that vast disparity. But, the problem with it is, we saw a dip in the paper prices for silver. But the physical commodity itself, as far as its trading and maybe even being sold as industrial uses, did not see that same decline. Every time the price of a commodity or precious metal rises rapidly, it raises emotions. And boy, isn't that the truth. Price targets are raised quickly, making silver even more attractive. What are the reasons for its sharp rise? And will this trend continue? Are there better alternative investments in the commodity complex? Well, one way to find out is to look at what is the primary mover of commodity prices. And this is where we have to think about silver as a commodity. We're too involved with the technical reasons why prices change. But more often than not, there are fundamental reasons. Prices change because business needs raw materials to produce goods. Other times, their needs are not so pressing because of lower demand expectations. Really, it's about that demand driver. The business cycle is the crucial development driving commodity prices. The business cycle is caused by the adjustment processes of inventories as they are changed to adapt to the growth of sales. Business and miners, and that's something to keep into account here too, because the mining sector is hot right now, especially for discovery. In fact, in a recent review of Phoenix Gold, they have done very, very well lately. And they do not react at once to a slowdown in sales. They prefer to keep producing, expecting a comeback in demand. This decision is based on keeping unit costs of production low by using plants at close to capacity. Now, outside of the pandemic, we know that essentially miners, they want to try to keep producing as much as possible, even though they've been held back in that regard too. But even under normal circumstances when demand is low, they will produce at a lower cost and hope to profit when demand paces back up again. The first reaction to a slowdown in demand is to cut prices, hoping to stimulate demand. As the slowdown becomes more pronounced, business is forced to cut production in response to bloated inventories and lower earnings. Supply, in other words, is trying to catch up with weakening demand. The inventory cycle is the main driver of commodity prices. The decision to cut inventories causes a reduction of the raw material purchases, and commodities decline. An increase in inventories caused by stronger demand forces businesses to increase raw material purchases, and commodity prices rise. This change in purchasing strategies drives commodity prices up or down depending on whether the business cycle is strengthening or weakening. It's illustrated here below in some of these charts. So the main issue for traders and investors is, of course, when should I buy silver? Or should I buy an alternative investment in the commodity complex? So here we can see in this chart, and look at the correlation between the two. The above chart shows the ratio of the price of XME, which is an ETF holding metal and mining stocks, and the price of silver. The lower panel shows a business cycle indicator, updated regularly in a report from peterdag.com. The relation between the two graphs is remarkable. It should provide an important strategic guide for investors interested in commodities and silver in particular. And so, this is something you have to really kind of hone in on, but it's another way to help you make a decision on buying silver based off these business cycles. Because in many ways, and I know it's tough for some silver stackers to understand, but hey, it is a commodity and it trades like a commodity. And the price movement is in correlation with the commodity. And I think that kind of thing leaves credence to these natural market forces that I'm talking about. And motion is obviously a driver for that. But look at how these correlate together. It's quite intriguing indeed. So this above relationship shows that metals and mining stocks are likely to outperform silver. The ratio rises between the two. When the economy grows faster, as it did during 2012 and 2014, and between 2016 and 2018, and since March of last year, silver is likely to outperform metals and mining stocks when that ratio declines, when the business cycle shows the economy slowing down, as it did during 2011-2012, although one can make an argument that 2011-2012, with this rise in silver, was kind of an anomaly. In fact, I talked about that in a prior video too. We did see silver rise in 2016, and we saw a little bit of slowing down during that time too. Now, obviously, the economy really didn't slow down until 2020 abruptly because of the pandemic, but it was strong during 2018 and 19 for sure. But nonetheless, there were some other factors that have come into play that spelled potential trouble down the road, even independent of the coronavirus. So silver does have important cyclical features that are in the natural market, and it has become more attractive than the XME, these mining stocks when the economy slows down. But it has been unattractive compared to some of these other mining stocks and other metals when the economy strengthens, as it did, as it's starting to show some right now. And I think that may be part of the reason why we're seeing some lower prices for silver at this present time. But it'll be interesting to see. But that business cycle is something to consider. And we are at a point now in time where we may see the economy start to improve in some sectors. But what do we have languishing in the background? The elephant in the room is quantitative easing, massive debt, and concern about just overall where we're going to go and how strong our currencies are going to be as a whole, and this great reset that is being talked about and bannered about all over the place. There will be something like that coming. There's going to be a major shift coming at one form or another, and more than likely it's going to involve several different scenarios being conflated, and I believe that could lead to more control of our everyday lives in terms of our financial transactions, which is why I have been saying that it is wise to hold on to your gold and silver as much as you can and to accumulate some when you can. And this may be part of a way to help drive and to help adjust some of your decision-making factors before buying silver. But that is just one opinion from this particular article, and my opinion is to buy silver based off of a concept called smart dollar cost averaging that I recently outlined in a specific video about that topic. But I'm not a financial advisor, but nonetheless, I believe it is wise and a good advice to hold gold and silver. So there you have it. So let me know your thoughts in the comment section below. If you hit the notification bell, you'll be noticed when a new video is published. More than likely, they are getting better at doing that, and that'll help you. And it would also help me if you were to hit the thumbs up button on this video too, to get the algorithm out there, to get the news out. So a little bit of perspective for you here. Let me know your thoughts in the comment section below, and I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.